Greetings and welcome to the ROIClear podcast. My name is Ray Hightower, and today we are fortunate to have as our guest Mr. Omar Ruiz. Omar is co-founder of LeRu Investments, LLC, and LeRu Management Services. And we're going to drill down into what he's doing in the business. We're going to tap into his experience. We're going to learn from him today, and I'm really looking forward to this. So, ladies and gentlemen, please join me in welcoming Mr. Omar Ruiz. Omar, welcome to the ROIClear podcast.
Thank you very much, Ray. I'm excited to be here and share what I have for you and your audience.
We're grateful to have you, man. Grateful to have you. To kick things off, one thing I'm observing, looking at your resume, you have so much experience in what you've done. You've been in the business for 17 years as an investor and as a property manager. And to kick things off, why don't you tell us what has surprised you in those 17 years? Is there anything in your experience that has really jumped out and surprised you during that time?
Oh God, there's been so many things over the years that have come down. But I would say more recently, pretty much since 2020, is just how things shook down with the COVID and how everything changed after that. Right now, just recently in the last several years, the spike in insurance costs in different markets throughout the country, that's been something that, was not really a factor, prior to like 2021.
Mm-hmm.
And I wrote a little bit about that on my blog there. So that is something that is very different from the prior God, what was that, 7-8 years that I was doing stuff out there and investing. What has been very I've always been a market cycles kind of guy, so it's always been very interesting to me is to see how we've been in a couple of different states. I'm in California, but now everything I own is in Texas, but I was out in the Midwest. I've traveled to many cities, looking for deals. And what's always been very interesting to me is how all these different markets and different cities evolve and have come out of the Great Recession. And some of these areas are just booming. Like and the example that I'll give to you tonight is kind of one of those such cities that early on, from what my lender explained to me, was one of the cities that Fannie Mae and maybe Freddie Mac took huge losses during the Great Recession, and now it's just a crazy hot market there.
Really? Now, where is this? You just piqued my interest, and I do want to get back to some of the things that surprised you, what happened with insurance and COVID. But when you mention hot market, chaos, I see opportunity. So would you care to share with us what you're seeing in that city? We're talking about a city in Texas.
Well, that's where I am now.
Okay.
But the 1031 exchange that I'm going to be talking about here tonight actually started in Indianapolis, Indiana. Okay, and we purchased that property way back in 2016. That's back then I saw, I keep my ears to the ground as far as where the job growth is. And a lot of people didn't know that, especially the seller that told me that property, they didn't know that Indianapolis at that time was getting ready to explode with jobs. So when we first purchased that property, that was our lender broker guy, who was fantastic multifamily guy. I consider him to be one of the best out there. He's guided us through several acquisitions there, and he rubs shoulders, probably goes out on the golf course with some of these, big guys over at the, Fannie, Freddie, or, with the lenders and all that stuff. And so he'd always give us these interesting insights to what happened to these markets, Indianapolis being one of those markets that got hit, extremely hard during the Great Recession. And so because of that, the lenders at that time when we were buying in there, they were very, just very careful. And, plus we were out of state investors. I'm coming from California out there.
Right.
So, but you can overcome that by having good property management, and that'll make the lender more comfortable working with you, lending you the dollars.
There's so much to explore there. You're based in California. You saw opportunity in Indianapolis, so you jumped on it. You do 1031 exchanges. You're also in Texas. You've got a lot going on in your brain all at once. So it is a challenge there's so much excitement. It's like I'm in a like if I'm inside your brain right now, I'm in a candy shop. And okay, what candy do I go after next? Because there's all this stuff that's going on, and it's exciting. So why don't we start off with, you mentioned Texas. I want to put that aside for a moment. Let's talk about the 1031 exchange that you're doing in Indianapolis. And if we have time, we'll go into some of the other areas. You did a 1031. Tell us about the property and how the deal came about, please.
Well, the deal came about just from my broker contact out there, and
Yes.
I was very fortunate on this particular deal. They actually, yeah, this almost never happens, but they actually allowed me to do the walk-in unit due diligence before I even went under contract. Um,
Excellent.
yeah, which
You must have
never.
great credibility with this broker. This is someone you had closed deals with before.
Well, no, this was actually the first deal that we were doing out there.
Really? Okay.
Yes,
All
yes.
right.
So that's what I
Yes.
was telling you. It was just a lot of things, lined up for us on this deal. But
How
you
many
know,
units was the property?
so this one, the first that we purchased was 77 units
Yes.
in Indiana, and we did a 1031 exchange from 77 in Indiana to a little over 100 units in Texas.
Mm-hmm.
And in that process, we had our group of investors in Indiana at the time. And remember, as mentioned before, we actually did the 1031 early on when COVID was hit. So that so
Mm-hmm.
that that created some challenges there.
Mm.
Um, but it also, with the investors, created a little bit of anxiety. So I'll talk a little bit about that.
Right, right.
Um, so it was a very complex 1031 exchange because we were bringing investors from one property in one state to a bigger property in a different state. Half of those investors stayed with us because,
Yes.
we did well in Indianapolis, and the other half decided to cash out
Yes.
because of what was going on with COVID,
Sure.
and some people just, you know, they thought there was going to be, mass foreclosures and
Mm.
evictions.
Mm.
The
Yeah.
news was talking about that stuff. And so that made them very anxious, even though they made good money. And one investor, it actually came down to like the day of closing. He just couldn't decide if he wanted to stay or go.
Oh boy. What did he eventually do?
Well, he eventually wound up cashing out.
Okay.
He had a self-directed IRA.
Yes.
So he wasn't going to pay any taxes there anyways.
Okay.
Yeah, the 1031 exchange, it's a really great tool for wealth building. Um, and on that particular deal, so we had bought the original deal in Indianapolis for a little bit over $2 million,
Mm-hmm.
and we were
77
going.
units for just over 2 million. All right.
Yeah, yeah, yeah. So it was a heck of a deal.
Yeah, absolutely. And what year did you acquire it?
This was in 2016.
2016. Okay,
Hmm.
pre-COVID, 2 million,
Pre-COVID.
77 units. Yeah. And what kind of improvements did you make to it to add to the value and before you sold?
Well, we made improvements to the roofs.
Mm-hmm.
On the interiors, we would upgrade the kitchens wherever we could. Mostly, like, we like to do like the finishes, things that you can touch, faucets, cabinet pulls,
Yeah,
uh,
yes.
things, doorknobs, things of that nature. Did a lot of improvements to the air conditioning in those units. Um, but a lot of that property, the improvements had to do with the operations, and and just keeping the property clean and looking good and marketing it well. We're in a fantastic location because it was high traffic. We
Mm-hmm.
had a Kroger supermarket across the street. So that went a
Yeah.
long way towards our marketing and helping us save money on our marketing. So
Sure, sure. Yeah, all the conveniences are right there, so residents are attracted to the property. Yeah, of course, that's going to totally accelerate your marketing.
yeah,
Yes.
oh yeah, and we had a bus bench right in front
Oh
of the
yeah, yeah,
office.
yeah, yeah. My goodness, why'd you sell it?
Well, we were already in our fifth year of the project, and typically we tell investors, hey, we're going to be in these projects, plan to be with us, for at least 5 years. Oh,
Yes.
but okay, there's actually more to that question, a little bit more. There was a couple of properties. One went up for sale, and I put a bid on this one. I was kind of bummed out that I missed out on that one. This one was just right around the corner. They were in front of the Kroger's on the left side of Kroger's. We were on the front.
Wow.
Yeah, and that one went up for sale, and that one sold. So I was like, okay, well, that's a great comp for us.
Yes.
And there was another property, maybe a mile and a half away, so not very far away, and that one went up for sale too. So, we're 4 or 5 years into this deal. We have a couple of properties selling around us, and uh, I didn't want, if we held out too long, I didn't want those comparables to go stale and us not being able
Oh,
to, capitalize on those valuations.
got it. Bottom line is you're playing Monopoly with real money. You're playing three-dimensional chess while everybody else is playing tic-tac-toe. You're thinking ahead and you saw
Yeah.
an opportunity to sell while you were at the top of the market. And this was not just a theoretical top of the market. Your analysis was based on hard evidence in the form of the comp that was right around the corner on the other side of the Kroger from you, and the other comp that was about a mile and a half away from you.
Yep. Absolutely.
Okay.
Correct.
Wow.
Correct.
Wow. Okay.
So we had a we were going but we were going to have a huge capital gains tax liability on this one. So
Oh, yeah.
so we
Yeah.
purchased it at 2 million, a little over two
Mm-hmm.
million, but we'll just say 2 million to keep it numbers easy.
Mm-hmm.
And
Mm.
we were going to we were under contract to sell it just a little bit less than 3.2 million.
Mm-hmm.
It was 3,175,000. So we were going to have a capital gain of 1.15 million, and our tax liability at a 20% tax on that, we were looking at about $230,000 of a tax liability. That's
Oh, yeah.
that was a huge, that
Yeah,
was going to be a huge hit, right?
absolutely.
So that's why, we said, okay, well, we're definitely doing a 1031 exchange.
Right.
Um, and it was it was a very complex 1031 exchange, but we did some things, we did a lot of pre-planning ahead of time.
Mm-hmm. Yes.
And I always advise, for people out there that are syndicating deals, talk to your investors ahead of time. And I think we are probably talking to investors about 6 months beforehand, in one of our quarterly conference calls.
Yes, yes.
Just
So you
let people.
prepped them. You told them, hey, look, we have an opportunity to do this 1031. By the way, look at all the money that's coming off the table, and let's look at this huge tax liability we're avoiding. So yeah, I see. Yeah.
Yeah, exactly, Ray. And we actually put together a little spreadsheet because different investors had different percentage ownerships.
Mm-hmm.
So we put a little spreadsheet. Say, okay, well, here's your percentage ownership, and here's what your possible tax liability is. Um, you know, you I don't know if most people do that, but we thought that would help people, make a decision on that.
Oh yeah.
Um,
That probably is the reason you were able to keep 50% of your investors during COVID.
yeah, yeah,
That transparency. Yeah.
yeah, I agree. So I think that made it a lot easier for people, and that's why for some people it was a difficult decision at the end. They afterwards, regretted, getting cashed out. But hey, that's
Mm-hmm.
That's how things go.
Yeah, yeah, yeah.
But yeah, I mean the 1031 exchange, it gets its name from the 1031 section of the IRS tax code.
Yes, yes, yes.
And and so what it does, it legally allows you to avoid capital gains when you're selling investment property. Now you can't, it doesn't eliminate it, but it puts it off, defers it somewhere down in the future.
Yeah. You don't have to pay until you die, and when you die, the basis goes up, and so your heirs don't have to pay it. So it's beautiful.
Correct,
Like
correct.
you said at the beginning, it's beautiful for wealth building. Why don't you tell us about the deal that you exchanged? By the way, let me
Mhm.
pause and mind my manners. Congratulations. There's a lot of financial engineering that went into that deal. So that's very cool. Why don't you
Thank
tell us a
you
little bit
very
about
much.
the up leg? You traded into a 100 unit plus deal in Texas. What part of Texas did you go into?
That's up in they call it West Texas, but really it's kind of North Texas to me, North, or I guess Northwest Texas, but they all
Yeah,
call it West Texas up there in the city of Lubbock up there.
Lubbock.
And
Yeah, oil.
yeah,
That's an oil town, isn't it?
there's a little bit of the oil is really south of there. I believe it's McAllen out there, and there's another city down there. It is.
McAllen, Brownsville, Harlingen,
Yeah,
Ravenhill's done.
Brownsville is almost down at the Gulf of Mexico. It's actually one of the, I think it's the most south. And I've been down there, so I'm very familiar with the market. But it's like the most southern city, I believe, in the country. I believe it's right
Yes,
on the
yeah, it
borderline.
is. It is. Yeah,
Um,
we should talk about that. I've spent some time down there too. So yeah, we
oh,
should compare
cool.
notes. Yeah,
Oh,
yeah,
absolutely, absolutely. I love that.
yeah. So
But
yeah, so you were in Lubbock, you traded into a 100 unit deal in Lubbock. What made you choose Lubbock? Was it the location? Was it the property? Was it both? Was it the numbers? What made you trade in you exchanged out of a deal in Indianapolis, Indiana into a deal in Lubbock, Texas? Maybe you could connect the dots for us between those two deals.
yeah, sure. Well, actually, we had a analyst here with us who was doing our underwriting, and I just came through a connection there. And this was a deal that actually fell out
Hmm.
because of COVID. Also, it fell out at the time, and it's funny. It's like some of the best deals I've ever done have been those kind of like type deals where something goes haywire, the deal falls out, the brokers come back to us, and
Yeah.
then we're able to step in and take advantage of the situation there. Um, but that was a market that was seeing decent job growth, good population growth, college town, and that's really a big part of what I do here is that I'm always following the job growth, doing deep research as far as where companies are
Mm.
moving, where the needle's moving as far as job growth, because the job growth is what creates population growth, and
Mm.
and that population growth creates demand for housing,
Yes.
and that demand causes values and rents to go up.
So it's fair to say that your primary metric, of course, you look at a lot of metrics, but the first and the primary metric you look for when you're considering an acquisition is job growth.
Yeah, yeah. There's got to be um now sometimes when we go into these markets, the job growth has not hit yet
Mm-hmm.
because those jobs are still coming in. There's companies moving in there, but we're expecting the job growth, the fulfillment stage of those jobs to come in, and then that's what propels all that demand forward. And that's exactly what happened in Indiana. We were there a little bit early. Well, actually, we were there kind of like right when the job growth started happening because
Mm-hmm.
it's interesting when I first got there. Okay, and granted, it's the Midwest. At that time, I had it's a whole different animal to me, but I really enjoyed it. I kind of my I have a very my curiosity is piqued. I like novelty. And
Yes.
so, being in new areas, new things, it's new learning for me. So that kind of fulfills my curiosity.
Mm-hmm.
Um, but man, I'll tell you, by the time we were selling this property, and I saw this progression over the years while we were there, because I was spending extensive time out there looking at stuff. I was going, going to Chicago, going to Detroit, which was,
Yes.
really, interesting for me, and Ohio and all these other areas. But by the time we were out of there, my God, it was there was so many jobs out there, Ray,
Mm.
that every day you would hear on the radio, hey, we're looking for warehouse workers. We're going to pay you, 16,
Wow.
17 bucks an hour. There was
Wow.
billboards all over the place. Hey, looking for workers. There just was not enough people in the area.
Mm-hmm.
And, and, I would, be in the office there, and I would kind of track, where our tenant prospects, there were people coming in from Chicago, from Detroit, from Kentucky, from
Mm.
Ohio.
Mm-hmm.
Man, they were just coming from all over the place because they were looking for the jobs. And man, I remember one time, I was there on a Saturday. Nobody's in the office on the Saturday, and I told them, well, I'm in town.
Mm-hmm.
I got nothing to do out here. If you guys want to do any showings, I'll do some showings. No big deal.
Yes.
And this guy, because we were on that high traffic street, this guy just kind of came out of nowhere. He's a trucker guy, but because he had this special type of license to transport, I don't know, maybe, I don't know, gas or, whatever, I don't know. They were giving him a like some kind of like a signing bonus. I don't know
Yes.
what it was. So they gave him the bonus there so he could find a place. And so he was there on Saturday, and he didn't have a place by Monday.
Yeah.
I said, okay, come
Wow.
on down. I'll show it to you. You can bring your paperwork next day on Sunday. We'll get you moved in. And sure enough, we got him approved by Monday. He was in there, and he was happy as clams.
Wow. Wow. So, listening to you, it sounds like you're getting very involved in the hands-on property management. Are you hiring a property management company, or are you doing it yourself, or a hybrid? What is your level of involvement there?
Yeah, no. So there we did have a third party property management.
Yes. Yes.
And but during those times, sometimes I would spend weeks at a time in the market, looking at stuff,
Mm.
um,
Mm-hmm.
and just checking out, doing audits on the operations and all that stuff. But typically the office would be closed on the weekends, so there was nobody in
Okay.
it. So it's like, you know, what am I going to do on a Saturday or Sunday? I got nothing going on. I'll just, so we always had a unit in our apartment. We call it the corporate unit, where,
Yes. Right. Right.
instead of spending money for a hotel, we just stayed in the apartment there.
Yes.
So, I was like, well, if it's going to help out, for me to show a unit or whatever, and I own a property management company here in California. So,
Mm-hmm.
it's like I know property management inside and out. And,
Yes.
I'm a pretty good lease up guy.
Yes. So you manage your properties in California through the property management firm you own in California. But when you're investing in other states, in Indianapolis, Indiana, or Lubbock, Texas, you'll hire a third party there.
Yeah,
Got it.
and we actually started our investing career in property management because we always figured as long as we know all there is about property management, and it doesn't matter where we're in Texas or Indiana or Ohio, wherever, as long as the third party management is you know following our procedures and our processes, we mitigate the risk of the management aspect going back.
Mm-hmm.
Now saying that, I have had to fire property management companies, in the past.
Mm-hmm.
Um, and just there's that saying, you can't judge a book by its cover, right? Well,
Yes. Yes.
I've had some property management companies that they got a nice looking website. On the surface level, everything looks beautiful. They look. There was
Yes.
even a company that was they had the CPM certification.
Right.
CPM was
Okay.
and
Certified
and
property manager. Yeah. Right.
hmm and those guys fell short. They did a
Mm.
lousy job of qualifying tenants. Now, my company out here in California, we don't have a certification, designation CPM, but I'll
Mm-hmm.
tell you what, we are a heck of a lot better at qualifying prospects than those guys were.
Yeah. Okay. There you go. So it's not always about the certification. It's about what you're doing. It's about the execution.
Yeah, yeah, absolutely. And
Okay.
so,
Wow. You know what? Our time together is going really quickly. We are almost done in terms of time. And there's
okay.
so many more questions I want to ask you about your deals and what you're doing. And we're going to have you back, Omar, because you've got a lot of experience and knowledge. And I think that if we drill further, we're going to hear some more war stories and everything. You've shared a bunch with us, with the 1031 exchanges and the property management and ventures. And I know we could drill down into those, but let me ask you this: to constantly improve what you know and to keep learning. I mean, obviously you're a learner. You're obviously learning all the time. What are you reading or what are you doing or what are you listening to keep learning and to keep growing as a professional in this industry?
Well, right now, there's a couple of books that I just came across that what's it called, the Who Not How book, that I
Oh,
yeah, you know about that one. That's
oh
that's a
yes, love it.
that is a great book. And it's about putting the right people to help you get to wherever you want to get to your goals. A lot of sometimes people try to do everything themselves, and that's not the best route.
Right.
I've learned that over the years. Another great book. You probably know about this one, Ray. It's called the Road Less Stupid or something like that, or do
Oh goodness.
yeah, Road Less Stupid. Oh man, that's
Speaking
a
of
great
Texas,
book.
that guy lives in Texas. That author lives in Texas. So yeah, wow.
Yeah, that's. I'm actually still in the middle of that one, but you know, what I've gotten through is very profound in that book. It's excellent read, excellent read.
Yeah. Oh, it's interesting you mentioned The Road Less Stupid. That took a while to read. It's not that it's hard to read. It's like when I'm reading that, I'm saying, "Oh my goodness, that's another mistake I made. That's another mistake."
Mhm.
And I'm drilling down. So yeah, those are two very good recommendations. Who Not How by Dan Sullivan and Benjamin Hardy, and The Road Less Stupid. Oh goodness, I'm not remembering that author's name, but I remember he's in Texas because he talks about that. So yeah. We will
Yeah,
make
yeah,
sure to include those in the show notes. Yeah, grateful for those recommendations. Most grateful for those. And then finally, how can people get in touch with you?
probably through my website is the best way. It's LeRuInvestments.com.
Okay,
LERU followed by the word investments.com. Um, yeah,
excellent.
we got a contact page there, and they can, anybody wants to connect with me, they can connect with me there.
We will make sure that we include those in the show notes. Mr. Omar Ruiz, it has been a pleasure having you today on the ROI Clear podcast. And we really do want to have you back. You're doing a lot, and we want to drill down further.
Thank you very much, Ray. And hey, I wish you and your audience great success.
And thank you for engaging the ROI Clear podcast. At ROI Clear, we buy multifamily apartment properties, we improve them, and we give people a great place to live. At the same time, we give investors an opportunity to enjoy capital preservation, tax advantages, and a solid return on investment. If you'd like to know more, click the link to roiclear.com down below. We look forward to speaking with you.